Welcome to our Forex and CFD Market Focus Report for Thursday, September 26, 2013. Let's go ahead and take a look at our economic calendar today. Earlier today in Australia, we saw an improvement in job vacancies. It was the best print in about 12 months, but the trend in unemployment in Australia is expected to continue higher over the next several months. In the Eurozone today, we'll get some M3 money supply data and look at monetary growth in the Eurozone. In the UK, we're going to get quite a bit of data today. We're going to look at some GDP numbers. GDP is expected to expand about 0.7% quarter over quarter and about 1.5% year over year. In the U.S. today, we're going to take a look at weekly initial jobless claims. Claims have been trending lower in recent weeks in the U.S., and that has led to the general perception that the labor market may be improving. We're also going to take a look at second quarter GDP in the U.S., expected to tick higher to around 2.6%. Pending home sales will be the latest home data we'll get in the U.S. today. We'll see if the U.S. can continue its upward trend in the housing market recovery. Fed official Stein will speak later today on monetary policy in Frankfurt. We had some comments out a little while ago out of Stockholm, Sweden from Richmond Fed President Lacker, who questioned the effects of quantitative easing, suggesting perhaps that the impact has been limited, and noting that the Fed may have some difficult problems ahead as it unwinds or tapers quantitative easing. Let's go ahead and look at some other asset classes here today. This is a daily chart of gold against the US dollar. In this chart, we can see that gold is currently trading around $13.37 per ounce and has a 3-day upward trend higher. It's much the same story for silver. Silver has a 3-day uptrend and is currently trading around 21.88. We'll see if silver can recover and perhaps tackle the $22 level. Gold and silver are taking some cues from the showdown in Washington, D.C. concerning the possible shutdown of the U.S. government when the next fiscal year begins on October 1st. Let's go ahead and take a look at the energy complex. This is a chart of Brent crude oil futures. We can see they're currently trading right around the 108 figure. Yesterday we saw a significant sell-off in oil prices, mostly due to a surprising increase in U.S. weekly oil stockpile data. The markets had expected a drawdown of about 2.6 million barrels, and instead there was an increase in inventories in the U.S. Much the same story with West Texas Intermediate, now trading right around 102.59. Look at this dramatic downtrend here. Over the past several trading days, crude has moved from around the 107.75 area, almost the 108 figure area, all the way down to the 102.5 area, even trading as low as 102 earlier today. That's about a $6 move in about 7 trading sessions. That's the longest downturn in the price of oil for quite some time, at least several months. Let's go ahead and take a look at some FX activity here today. We can see the Japanese yen is the weakest performer here today, which is a marked contrast to the past couple days when the Japanese yen was outperforming most of the market. We can see over here that the Australian dollar has recovered nicely. The Australian dollar complex is broadly higher today. And the strongest currency today is actually the New Zealand dollar. The the Kiwi complex down here is the biggest outperformer today. This is a daily chart of the US dollar activity index. We can see it's a little bit above the blue line, indicating a slight upward trend, an upward bias for the US dollar today. As we mentioned, we're going to take a look at that GDP data and that housing data. We also are going to await some comments from Minneapolis Fed President Kocher Lakota later today. And then tomorrow we'll get some additional comments from other Fed speakers, including Kansas City Fed President George, who has dissented at recent FOMC meetings. Our Euro daily activity index indicates that the euro is coming off. A nice downward trend is developing here during the European session. In recent trading days, the euro has been higher on the premise that the European Central Bank will support European banks and financial institutions with additional LTROs, that's long-term refinancing operations, as liquidity continues to drain from the system. We would expect that that would take place later this year or early next year, and probably end up being about a 2-year facility. Here in the Japanese yen, we can see that the yen is moving significantly lower today, as we just saw. Over the past couple days, however, it was a different story. We can see up here that the Japanese yen was in a positive uptrend for a couple days. That was primarily on account of the unwinding of short yen carry trades. The carry trade is back in vogue today, has found favor with traders, and that is why we see a weaker yen today. We're also waiting October 1st. October 1st is a very important date in Japan for a couple reasons. Prime Minister Abe will announce his decision concerning the tax increase, the sales tax increase in Japan. It's expected to move higher from 5% to 8% and be effective from April 2014. Also on October 1st, we expect Abe will announce a supplementary budget in Japan. This could have a weakening impact on the yen. Earlier today, we saw reports in the Japanese media indicating that the government wants pension funds and other large institutional investors to purchase less JGBs and more foreign bonds. Of course, this would have the impact of weakening the yen as greater demand for foreign currencies evolves and less demand for Japanese yen materializes. The British pound is trending lower here today after a couple days of trending higher. We're waiting that GDP data later today in the UK. The Swiss franc is also marginally lower today against other currencies. Has a little bit of a downward bias, but not much so far. As we saw, the Australian dollar has recovered nicely and has a nice upward trend today, intraday upward bias. The job vacancies data definitely helped, but of course, as the yen trade, the yen carry trade, finds favor with traders, the Australian dollar and the New Zealand dollar will continue to move higher because they have higher interest rate differentials over the Japanese yen and other funding currencies. Canadian dollar just can't seem to catch a break. Here we see the C dollar's daily activity index. We can see that whenever the C dollar tries to gain a little bit of ground, it just falls even lower. It's really unable to gain any traction at this point in time. In recent trading days, we have seen interest rate expectations in Canada move lower. The market is currently pricing in about 5 basis points of tightening between now and July next year. Finally, the New Zealand dollar is the outperformer and the darling of the day. We can see on this New Zealand dollar activity index that it has moved sharply higher today. In recent trading days, the New Zealand dollar was below this blue zero horizontal line, indicating a nice downward trend. But as the carry trade has become popular again today, traders are again chasing foreign yields, and that has pushed the New Zealand dollar higher. Let's go ahead and take a look at some currency pairs that are of interest to us. This is a daily chart of the New Zealand dollar against the Swiss franc. We can see that the New Zealand dollar tackled this 75.43 area here. This red line represents some resistance, and the market has moved above that area here during the European session. We can see it remains supported above yesterday's low, and we can see that our next upside targets come in around the 75.57 area, followed by the 75.80 area. We have a moving average to contend with up here, and above that we would test right around the 76 figure. So we'll keep our eyes on those key technical areas. This is a daily chart of the US dollar against the Canadian dollar. We can see that the US dollar has reached its highest level in 6 or 7 trading days. So the US dollar is trying to advance against the C dollar. We can see it stopped right around this key 103.25 area. That represents the peak to trough, in other words, the intra-month September high to low 38.2% retracement area. If we can move above this area, we're going to test this purple moving average, which now comes in right around 103.48, and above that we would look to 103.70 and 104.14 as upside resistance targets. Here we have the British pound against the Australian dollar. This is a daily chart, and this is one of the best technical moves today. We can see that the British pound was unable to get too far above the 171.77 area today. That was right around yesterday's intraday high. We get a little bit of traction above that area, but then the pound came off, and as traders bought the Australian dollar back, it tested this key area here, coming in around 170.67. That's the 38.2 retracement level of the move from the 19th of September up through today. Today's intraday low also coincides with this yellow uptrend line. So a very nice technical trading here today on the sterling Aussie cross. Finally, we want to take a look at the euro yen cross rate. This is a daily chart of that cross rate, and we can see that the euro continues to flirt and orbit with this trend line here. This is actually a channel line moving higher. It's been flirting with this level for 3 consecutive days. We can see some key technical resistance areas that the cross took out earlier today. It moved above this 133.53 area and also tested this 133 area, but then moved lower. On the upside, we would test 134.07, and then we would expect a test of the 134.40 area on any additional euro strength. We thank you for tuning in to today's Forex and CFD Market Focus Report.